Welcome back everyone to the Cobra Trading Channel, where we focus on people, passion, and platforms. I'm Alex Bustos, and today we're going to be focusing on the issues traders face when trying to scale their strategy. First off, what is scaling? Scaling is when you enter a position in increments slowly at a time. So if you're trying to get 10,000 share position, you're going in 500, 500, 500, and so forth. If you're trying to scale out as well, meaning you're taking profits, you're gonna scale out 500, 500, 500 as well. So those are the different ways of scaling. You're either scaling in a position or scaling out of a position. Now, when you're going to scale, you need to have conviction and you need to have confidence in your plan. And don't let stubbornness creep into there, because if it does, it can put you in a bad position where you're just like, okay, I'm scaling, I'm just gonna add more, I'm gonna double down. Because if you start to double down and not have a plan behind the reason to do that, you could end up throwing good money after bad and really be in a stubborn position where you could potentially blow up your account, and we don't want that to happen. One of the issues you may face is liquidity issues. This is when a stock may not be able to take a big position order. So if the stock has a bid and ask of, let's say, a 2-cent spread, and they're only offering maybe 100 share positions or 500 share position orders, and you're trying to get a 10,000 position order executed, it's going to be very difficult to get an order executed without really impacting the stock. In other words, you're going to want to break down your position into smaller increments, maybe 250 share position sizes, and enter them slowly so you can have a nice average without impacting the stock and inadvertently making it go against you. This also applies to selling your position, or in other words, taking profits if you're a short seller. Why does this make sense? Because if you're trying to get out of a position and a stock goes from $1 to $1.25 and you're up 25 cents a share and you want to take advantage of that, if you try to take all your 10,000 shares at the top, you could impact that to where you only take maybe a half off or even only a quarter off before it really drops. And then you take the rest off for a break even or even a loss. So in order to prevent that issue from occurring, you're gonna wanna slowly take profits into momentum, into volatility, into volume. All of those words are very important. You want to make sure when the stock is really moving in your favor and there's a lot of volume coming in because tons of people are excited, that's when you want to slowly scale out. Or if you're trying to get into a position and you're trying to buy and it's panicking down, you slowly scale in. And again, don't forget, don't get stubborn. Have a plan before you decide to scale. Don't scale after a position is working against you. Decide to scale before you even enter your first position. You don't want to decide after the fact, because then you're going to be stubborn. Another issue is if you're trading, let's say the OTC market, and you're trading a certain strategy that works very well, but then all of a sudden, when you get to a bigger size position, maybe 10,000 shares, maybe 50,000 shares, it doesn't work quite well because the average volume of that stock might have 200,000 shares on the day. Maybe it's 1 million shares on the day. And if that's the case, you need to pay attention that if the average volume is 1 million shares a day, and today, the day you're interested in trading has 3 million shares, that got you interested in it. So you're taking a position. Be careful and be aware if you decide to hold it overnight or the next day, that volume can easily shrink back down to the average daily volume of 1 million. So you don't want to be taking a 250,000 share position on a stock that trades on average about 1 million shares a day, especially if you're gonna hold overnight. Because if you have, let's say 250,000 shares, and on the day you take that position, it's trading 3 million shares in volume, well, that's not as significant as taking 250,000 shares on a 1 million share day. Because now you're a quarter of the entire volume, which means when you wanna get out, you're gonna significantly impact the stock, which can really hurt your exit position or make it harder to get out when you want to get out. So always keep in mind, if you're going to hold the stock overnight, or if you're going to trade something with bigger position sizing because you're deciding to scale up over time, you want to add more shares, if you're going to do that, pay attention to the average daily volume of that stock, especially if you want to hold it for more than one day. Some traders may face the issue of not being able to scale at all because there may be no borrows available. If you're a short biased trader and you're trying to scale a strategy that requires you to borrow shares, well, there may be times where a strategy that may yield $1,000 profit every time you take the trade can't really yield $3,000 profit because there's going to be times where there's no shares available, where you can't borrow more than 1,000 shares, where you can't borrow more than 200 shares, or where there's none available at all. So you got to understand that if you're trying to scale a strategy, ask yourself the question, what are the deterrents? Do I need to get up earlier and maybe request shares sooner through Cobra, which you can reach out to cobratrading.com, click the live chat feature, and we're more than happy to try to help you locate shares even faster, sooner. But there's still that possibility where you might not be able to get the entire shares that you want to get. So you got to be aware of that and know that not every strategy is scalable. And another quick tip when it comes to not being able to scale a strategy, maybe you can, right? Maybe you have the shares available, but you might not want to do this because you got to ask yourself the question, what are the odds that the stock can just rip against me and be halted to the upside, especially if you're short? And if you're short a big position, sometimes it can be difficult to get out without significantly increasing the stock price. Because when a stock is halting to the upside and you're trying to get out of a huge position that's significant to the stock's volume on the day, then you can really increase that upside even more, which can hurt your account significantly. So you need to be aware of this and understand there may be stocks you might not want to scale into, or you might want to ask yourself, what am I really looking for before I decide to really scale up the strategy? Another issue is emotions. When traders are increasing their position size and they're deciding to scale in 2 positions, maybe they used to trade 100 shares and now they're trying to trade 200 shares. Or maybe they trade 1,000 shares and now they're like, you know what? I'm doing well, been doing well for a year, and I'm gonna increase it. So they choose 10,000 shares because they're like, you know what? If I trade the same thing the same way, I should be fine. And in some cases that is true, but in a lot of other cases it is not, because you forget about emotions. And when it comes to emotions, if you're only trading 1,000 shares and something moves 10 cents against you, you're down $100. And you may be okay with that. But if you increase it significantly, quickly to 10,000 shares the next day, well, now you're down $1,000 every 10 cents it goes against you. That can really shake your confidence and your plan to stick to your trading strategy. And you may end up getting frustrated and then start rolling downhill and start doing revenge trading, getting upset. I should have stayed in because it would have worked. Instead, I got out because I was nervous. All of that can easily seep into your trading confidence and then make you question a lot of things. Maybe make you scared to ever size up and not let you really enjoy the scalability of your strategy. Because if you do that too soon and then you got to go back to 100 shares, you may be scared to increase it the right way, which in my opinion is slowly increase it every month or every week, whatever you decide, but make a small increment to where it doesn't even impact you at all, where you're just like, why am I even increasing the size? If it doesn't really matter, then do it slowly and surely you'll get to that bigger size position. It may take a lot longer, but you may be able to avoid a big setback in your confidence because trading has a lot to do with your confidence. If you can trade with confidence and you can continue to be consistent. Now, let's say you start to scale in your position, you're starting to do well. An issue that can come up is you trying to compete. You trying to share it with the world. Oh my gosh, I just made $1,000 in 1 minute, $5,000 in 3 minutes, whatever it is. That's great. It can be a good motivator for you, but be careful because you'll see someone else on Twitter or another social media platform and they're doing more. Just know there's always someone who's trading bigger. There's always someone who's trading better. So just focus on you. So that way when you're scaling, just worry about where you were at yesterday and how you can improve today. And focus there because you don't want to slip into ego and slowly make the other mistakes that we talked about, like slipping down the slippery slope and starting to get anxiety, not performing well, it's questioning your strategy and all of these other things because you're trying to size up even more to compete with someone out there it doesn't really matter because everything that matters is right here. One other issue that you want to be aware of is understanding that slippage is a big deal when it comes to increasing your position. So when you're trading 100 shares, it's easy to get in and out. When you're trading 1,000 shares, it's still quite easy. When you're trading 10,000 shares, it can be a little bit more difficult. So have a plan for slippage. That way, if you take a loss, it's not a bigger loss than you expected because you didn't account for slippage. But if you account for slippage, then you will never be shocked and wonder, why am I losing a lot more on this strategy that I normally don't really lose that much on? Understand, to get out of a bigger position, you're going to affect the market in some way. So you need to account for that and plan for that, and good luck.